Hi, this is Money Mike. So first of all, I'm not saying that my strategy is the best SPAC strategy out there. There are many strategies that might work. But most of the time, someone having returns over 200% is most likely YOLO betting on one ticker just so he could get the Wall Street Bets Hall of Fame. Me personally, I am diversified at one time in more than 5 tickers. With this strategy, it is possible not optimistically, not pessimistically, but on average, make 210% gains per year and even more. Why more? Because you can compound this money 3 times over the 1 year period, and that would result in 400%. I don't even want to mention this number in title because that would just sound too crazy. And even 200% per year sounds too good to be true. So I decided to finally make a whole video where I will deliver statistical proof, and as well I will show you exactly how I am doing with this strategy over the last 4 months. Before I start, I just want to point out this is not an investing advice by any means. This is all just my observation and what I do with my money. There are many risks involved with SPACs, and my strategy might not work in the future. This is why we have Patreon and Discord when we actually discuss these things, whether this would work and would not in the future. Link is in the description, by the way, you can join us there. So my whole strategy is to focus on buying SPACs that didn't have announcement yet and selling it most of the time at the time of announcement. My strategy also involves buying only warrants, which gives you bigger exposure to gains and also losses. And since I expect gains, that can result in better results. Let's first start with the winning trade percentage of this strategy. Here is my SPAC trading history. One thing how to evaluate a trading strategy is the percentage of winning trades, followed by wins and loss spread. So here's my entire list of warrants trades that I made with SPACs. It has 19 tickers. Now, if you focus only on my losers that are in this column of total gains and loss, it is interesting that most of the losing trades are when I was not following my strategy, and that would be this ticker, this and this. I was either trading after the announcement or I didn't wait for the announcement at all. The reason why I share these trades is I just wanted to be transparent. So now we can exclude them from the sheet, and now we are down to 16 trades, and we have only 2 losses that are near break even. There are almost no losers. 87% of the time I have a successful trade. That doesn't mean there are not going to be losers. I'm ready to take a 30% loss and still be comfortable with that. And you should be as well if you are considering this strategy. Now let's talk about the spread of gains and losses. That means the difference between how much you can lose and how much you can gain. The spread would be heavily favored to the gains because there are few losses in this specific trade history, and it is a 13% trades when I lost money that are near zero. From this point of view, this is a risk indicator that seems to have a great result. So let's go next. Now you can say, Mike, give me a proof that this actually works other than your trading history. Fair enough. So I took the data from the whole SPAC market. How did I do that? I created a SPAC mega sheet with 400 plus SPACs, put in the hard work, and I tested this strategy with the hard data. And the results, well, we are getting to the second part of this strategy and video, which is the rate of return. If you would buy a SPAC warrant before the merger announcement, that means that SPAC didn't found any company to merge with yet, and then you would sell it right after the announcement. That is actually where I am trying to capture my returns, which mean the rate of returns. So I made a calculation on every SPAC company that announced a potential merger. Right here was the change in percentage in the price of the warrants a few days before the announcement and 1 day after the announcement. So what is the change between those 2 dates? So statistically, the number is 70% change on average. Now, this number reflects the data over the last 54 SPACs and probably around 5 months worth of data. There is really not much more into it. You can have, based on historic data, 70% returns if you just follow this simple idea. Buy warrants before the announcement and sell them right after that. So my question was, I always want to be a step ahead. How I can improve this number? What I can do better than others? This is where we are getting to a very important part of this strategy, which takes this strategy from a good results, 70%, to a hyper result, 210% on average. This is why I think my strategy is unique from anyone else. You want to take a look at the trade duration. Trade duration highly impact your overall results. If we talk about return of S&P 500 on average 7%, you are talking about the annual return. This is how much you can expect your money to gain after 1 year. If you want to talk about the trade duration with SPACs, you should ask this question. So how much does it take with this strategy to do one trade? In other words, how many days it takes on average from a SPAC IPO to have a merger announcement? If you look at the same data from those 54 SPACs that had announcement, the average number of days from the SPAC IPO till the day of the announcement takes on average 300 days. Basically, you can have 70% in 300 days, which is almost a year. The problem is that this number does not include those SPACs that didn't have an announcement yet. So on average, we might be looking at 400, maybe 450 days. And this is where my approach comes in. What if I was able to lower the waiting period between the SPAC IPO and the merger announcement, these 300 days? What if I could forget about all this speculation on teams, target country, size of the SPAC, and other speculations and just focus on this trade duration? If I will be able to shorten this period by a half, that means instead of, let's say, waiting 1 year for announcement, I would wait only half of the year. I could take my money and reinvest it and get 2 times 70%. That would result in uncompounded 140% a year. What if I could decrease the average period not by a half, but by a third? Which means to decrease waiting from 1 year to just 4 months. I could potentially make 3 times 70%, which again, uncompounded is 210% per year. The question is this possible? Could this possibly be done? I believe I'm very close to this number. Currently, actually, below the number. These are the returns with SPACs warrants from the last 4 months. 160% returns. And here is my average trade duration on SPACs that announced a merger that is 48 days. Now you can compare it to this average SPAC market, which is 300 days. And then I hold warrants that didn't announce merger yet. And those, on average, I hold for 60 days and still waiting for announcement. So this is the general idea about my strategy. Numbers sounds too good to be true, and I would agree with you. This is why I felt important to back everything with data. This whole strategy is just idea that I backed by the data and that I am providing with my spreadsheet and my trades. What you or what us should be worried about. The very important idea about this strategy is the question whether this can actually last. And I believe not in the long term. Market inefficiencies usually disappear over the time. I believe people will soon understand this idea and people will make a bubble out of SPACs. I approach this strategy with a high awareness. This strategy can at any time stop working, and this is why I think it is important to monitor the price of the warrants and actually never buy warrants which are above your comfortable price. For me personally now, I don't buy warrants above $2, even I might think we will see an announcement next month. If you can pick a hand of SPACs that have a good chances to merge in the closest time possible. I think you will always outperform the SPAC market. I think what people don't understand about my strategy is that the point is not to catch them all like with Pokemon. You have to stay focused, not to care about other announcements. You should only focus on your average time to SPAC announcement. That's it. It is hard. There are many interesting SPAC out there. That is why investors should have a strategy and follow that no matter what. Let me know what you think. What strategy do you follow? Let's give this video a thumbs up if it gave you some value. That way we can reach out to more SPAC investors and create a better community of people who try to stay one step ahead. I have more than 70% of assets in SPAC warrants. So SPACs are going to be my main focus in 2021. So I'll make a lot of content around SPACs and the best strategies that I personally think are out there. With that, make sure that you subscribe, stay one step ahead, and see you guys next time.